Welcome, everybody, to the Q1 Client Only Huddle, first one of 2026. Excited to be with you all. I'm Will, and today we're joined by an all-star team of Taylor and Christine and Rabih. And we're excited about this we're trying out a new format this year. So this will be a recording that we're going to send out the following day. And hopefully it allows for everybody to access it on their own time and not have to be there live. And also, it just allows a little more access to this. And we hope to cover important topics throughout the year. As it says on the slide, it's client only, so we can really get specific about what we want you guys to know. And we'd love any feedback or any thoughts or anything else that would be valuable. Please feel free to let us know, and we can implement it, because it's very much something that's moldable and we want to get it right. So anyone else want to add anything?
This just gives us the flexibility when Robbie's like a little bit more colorful, we can edit it out as opposed to it being
That's
live.
true.
So.
Well, I think it's too, like you said, this is for our clients. So if there's anything you do want to hear more about, please let us know. Give us that kind of feedback and we will incorporate it into future quarterly reports.
Love it. Okay, without further ado, let's get going. So first, a couple company announcements. One of the most important things for clients, I'm going to have Chris speak to, because we would love it.
I love being first off the shoot here that, yes, here we are less than 50 days away from our third annual Dentist Money Summit. Come see us. Come spend a weekend with us in June 11th through the 13th, where we're going to be in the Zermatt Resort up in beautiful Midway, Utah. And again, it's just a great opportunity to come and meet your advisors in person, to meet your practice strategist in person, meet Rabih in person. We will be there with an amazing group of speakers and a chance to get to know each other, meet our partners in person, and just really connect. Bring your family. There's a ton of things to do up here as well. The best of June, best weather for Utah, and please come join us. We've got a great lineup of speakers if we can get to that.
Yeah, I would just say there's a little QR code in the bottom left. That's a registration code. So if you're watching this and you're like, I should probably check this out and go to the summit, then scan the code and it'll take you right to the registration website. Registration is free for Dentist Advisor clients. So all of you, anyone listening to this, you get to come for free, you get to eat food for free. Everything other than the hotel and the cost to get here is free. So
come spend a weekend with us. And again, This group, we've got a theme of every one of our events. This one is practice on your terms. Make your dental business yours. Make it work for you. Make it work with you. And we've got an amazing lineup of speakers. Every single one of these in their own field is nationally recognized author, speaker, podcast host, all sorts of different venues that they've been putting their message out. And starting with our on Friday right away, we're getting into looking at how do you handle the uncertainty. Is there any change going on in our world right now? How do you handle that?
Bit.
What is the resilience to handle that? How do you help your team get through this? And they've got their own issues that they're facing. So really so excited about Pascal coming and speaking with us. We've also got Richard Lowe, this idea that he's speaking about. How do you become successful yourself? How do you take care of yourself? Where's balance with your own life, both personally and professionally? And, just really taking everything, his podcast to the next level, Dentist. And how do you elevate yourself and become the better leader and owner and adult and parent figure that you can be. So I'm really looking forward to that. Beverly Flaxington. Wow. Just handling, again, more about change, really understanding what leadership means in the world today. What is your team looking for? What are your patients looking for? What is your practice looking for in terms of leadership? And again, hang out that night, Friday night. TJ Gurn coming again and going to have a fun time with some of our partners here at our happy hour on Friday night. Saturday kicks off with our returning guest from the first event we ever put on, Daniel Crosby, all about behavior around wealth and money. And again, multi-book author and really inspiring of how to understand wealth and money and the personal side of the relationships on that. We are also really excited to have a panel, not just with Yes, there are clients, but they're doctors at all different levels of their practice. So they're going to share insights of what they've learned of where they're at in the life cycle of the business, tips for doctors at different points along the way, and how Dentist Advisors has helped them along with their career. And yes, I skipped over our very own Rabih's going to be presenting from the stage. Come meet him live and in person with us at our event. So as we said, go back, click that slide with the registration link on it, and we hope to see you there. And again, only 50 days before we're going to be at this event.
Love it. Action-packed weekend. It'll be awesome. I think it's a great... I really genuinely, from the feedback we've heard from clients that have come, it's a great like reset, fill your cup weekend. You know, you're not learning how to, I don't know, fix a tooth, but you're learning how to be the best at your, be good at life. And that, obviously trickles down into how to fix a tooth. So really
practice,
think it's
practice ownership is more than just dentistry.
Exactly. Right. Love it. Okay. Great. This one we'll hit real quick. This is a pretty cool opportunity for clients. So anyone who hasn't heard about this, you probably, I guess this would be, most of you have probably heard about this in some way, shape, or form, but we added accounting services to our suite of services, and we have an entire CPA side of our team built out that we would love to have you look at, interview, and they've offered essentially a 5-point tax review. So there's no obligation to sign up with it. We're not saying that you have to do this. And we know that a lot of you have probably pretty good, solid relationships with your CPAs. If you're interested in making a switch and you'd like to work with our group, let us know. And you should have this little like tax triage done on your tax. They'll look at your tax returns. They'll look at your balance sheet, profit and loss statement, some things where there's some maybe some opportunity to improve, and see if our dental specific tax team can help you. So if you're interested, you can obviously just talk to one of us, the advisors, about it, or go to that website at the bottom, dentistadvisors.com/5point, to get a little checkup on your tax.
And as Will mentioned here, like this is, we always tell our clients we want to help you and be a part of whatever team you already have put in place. So again, if you are happy with your CPA, have a good relationship, we're not looking to replace anybody here. But inevitably, when we work with our clients, we do hear complaints, and we do, get people asking for recommendations, which is why we've added this service. And if you're just frustrated that your tax return is not filed and you've had to extend again for the 10th year in a row, the group that we've put in place, they don't extend their tax returns, right? They get them done. They're always done by the April 15th deadline. So if that's something that's like a frustration or you're dissatisfied, we really, really like this group that we put together. Would love to make the introduction. But as you guys know, we love the CPAs that we do work with currently. There's so many good groups out there. So just to echo what Will was saying there.
And I need to send in my modeling rates for that shot, Chris. You too, probably. Okay. Student loans. Taylor, we'll have you hit this one.
Yeah, if any of you are following all of our content, you're probably sick of hearing me talk about student loans, but there are still quite a few people that have their head in the sand and have just said, hey, I don't want to do anything with my student loans. I just want to keep them there until they make me. Well, guess what? They are about to make you do something with your student loans, right? So if you're listening to this and your student loans are paid off, or you've already done a private refinance, good for you. You don't have to pay attention to this next 5 minutes. But if you're out there and you are on an income-driven repayment plan, there's some big changes, specifically those that are on the SAVE plan. We have known since July 1st of last year, when the One Big Beautiful Bill was signed, that the current income-driven repayment plans were being phased out by July 1st of 2028. Right? So still a couple years out, but specifically with the SAVE plan, this is being phased out by July 1st of 2028 or sooner, right? And the big change that just happened recently is we learned that it is going to be the or sooner, right? And now the recent change that's happened is student loan servicers starting July 1st are going to send out notices saying you have 90 days to change from the SAVE plan. Right? So that puts 90 days out from July 1st, end of September. So between now and the end of September, if you are on the SAVE plan, if you're listening to this and you've just said, no, I'm not doing it till they make me, we know we've got about 4 to 5 months left, right? And this zero payment that you've been used to for potentially the last 6 years is going away, right? And you do need to make a decision either to switch over to the new wrap plan, which you can see here is coming available on July 1st of this year, or switch to the standard repayment plan. Or for existing borrowers, you do have the IBR option or doing a private refinance, right? So there's 4 options that are available to you, right? If you are on the save plan, but you're going to have to make one of those decisions, right? If you do nothing, you will be forced onto the standard repayment. And the standard repayment for someone who has 3, 4, 5, 600,000 plus of student loans is going to be $3, $4, $5,000 a month plus, right? So if you still haven't done anything and you're just waiting until they make you could come up. I mean, October could be a bad month for you when you have to pay several $1,000s a month in student loans, right? So all of our advisors are well versed on all of these details. If you have questions, please reach out to your advisor, set up a meeting, come up with a strategy. We will be reaching out in May, June for mid-years as well. So you'll be hearing from all of us here shortly. Please, let's get a plan in place. Let's talk student loans because there are thousands to tens of thousands of dollars at stake depending on which option you choose.
This is all good. Yeah, we kind of hit all this already, right?
Yeah, I mean, this is just more details. And again, you're not going to learn this all here from these 4 bullet points, right? So we have podcasts, we have webinars, we have videos that we've put out. If
You
you're
also
interested
all
in
have
learning more,
an advisor that you could talk to about this. So that would probably be the main call to action is get on our calendar if you have a question about this.
Yep. But
Okay.
you have to do something. Right?
This is the refinance option as well, but good. Okay. Rabih,
Yep.
the time has come. Market economy
and
rehab.
economy. I have a feeling that no one cares about the market this year.
Look at that, baby.
It's been hectic, you guys, and we know it. Like there are some clients who are shying out and not reaching out to ask and chat with us. We're always happy to chat with you, but there are others who've been emailing us, and all their worries are really justified. The market is doing stuff that it hasn't done probably from the 90s. The swings and the magnitude of them and the speed of them. It is not a usual call market behavior. This year has been hectic, but once you pause and you look at what it's been done for this year, we're kind of on a very conservative, annoying trend. Like we're up 2 to 3% for the year. That's it. So if you were hibernating whole winter and you just woke up in the spring, you would even guess that the world almost collapsed a couple times between then and now. But this is really what we have to learn. Even if looking going forward, it seems like there are a lot of potholes on the road. Looking in the rear view mirror, it seems like you've been just driving through a really nice field, and this is how it looks like. And when I'm saying nice field, it's because it's green. If you guys see the arrows on this chart right in front of you, it's all full of upward momentum across all different markets, which we are invested in all of them. That's the benefit of diversification. If one of them goes down, we're not really as affected. But at the same time, you're not concentrated in something that would blow up your portfolio. For the US, for the last year, so this is looking from March 31st, 2025 till March 31st, 2026. And this includes, the whole liberation thing and the beginning of the war. Although so far the war has all been recovered, so these numbers are still fairly accurate. Up 18%, international developed and emerging up 22 and 29, mainly because the companies have been doing well, but also because the US dollar has been depreciating against foreign holdings. So if you're a US investor investing in markets in Europe or in Asia, not only are you making money on your stock investment, but because the dollar is devaluing, you're even making money when you convert the currency back. In terms of the bond markets, with all the stresses that are happening around the world, the bond markets seem incredibly strong this year, which is a really good sign that, yes, a lot is happening on geopolitical stage, but this is not really threatening any of the fabric for the macroeconomic structure of this whole planet. So in that sense, the best advice would be either, do not look at the market and try to avoid it completely, which I know is hard, but if you can't do it, keep in perspective that the markets are functioning as they're supposed to be functioning the whole time. So you have to take a step back from the headlines and the media. Try to lengthen your attention span from the 30-second TikTok to probably the 10-year capacity of the economy. And when we talk about the 10-year capacity of the economy, there are two things that come to mind. All economies run on supply and run on demand. So I cherry picked for you a topic from each that I think would get us, get our, attention in the right place. These are both data that I got from the JP Morgan Guide to Markets, which are available. But if you look from the demand side, the economy is only going to grow if the demand is increasing and the supply is increasing, and we will add to the GDP. We're going to have a better standard of living, and we're going to be consuming and producing more. From the side of the demand, what will help the economy keep growing is, in the case in the US, if we are still able to consume, because 70% of the growth in the US economy comes from consumption. So those 70% are us, the consumers. How does the consumer health look like? Well, if you look on the chart on the left-hand side, it is the net worth, household net worth of the households in the US. And the chart shows you the net worth of Americans, all combined, is around $67 trillion. And GDP grows by like 20. The GDP is around 26, 27 trillion. So we're twice the size of the economy in terms of our net worth. And this is a very strong foundation that the pockets of American can handle turbulence. Obviously, there's a red flag regarding who out of these, households in the US is able to spend more than the other. It looks like that the top 20%, which, our clientele is in that demographic, the top 20% of households in the US have a much bigger or deeper pockets than the bottom 80%. And they are the ones driving most of the spending that is happening in the economy right now. But this does not mean that, the 80% of US consumers are losing money or in a bad stage. It's not, they don't have the same spending capacity as the top 20%. And if you see it on the top right chart, which talks about the income of the top 20% and other, deciles for income and spending, you can see that they go on par between one segment to another. It's only the top 20% where they have much more income than they are due spending. So those are the people who are able to save. In this current economy, the top 20% are able to save, our clients included. For the rest of the deciles, whether you're in the bottom 20 or in the bottom half or in the bottom 60, it seems like your spending and income are coming par to par. But we know that those are both growing year to year. So pockets are squeezed, but it's not in a position where you are losing money and you are bleeding money every single year if you're in the lower 50%. That is helpful. And the last point about demand, it's not breaking, it's tight, it's not breaking, is that most probably Americans are going to get a little bit more money this year to spend than they've done in previous years. This chart on the bottom right shows you how much is usually the average tax refund that is received, and it's usually between $2,800 and $3,200, and how much an American is expected to receive. 2026 estimates, due to the big beautiful bill and etc., is putting Americans at above, on average, $3,600. So that extra $500 and $600, when it's distributed over 170 million people in the labor force, that is a fuel to the economy that honestly, we're seeing it. The world might be ending, but we're still spending our money. So the whole idea is that from the demand side, we are good. And I would not start to get worried until there's problem with like credit cards or problem with small businesses or problems with private credit. But so far, thanks to our spending habits, we're still churning. And this does not break easily. So this is from the demand side.
So what you're saying, Rabih, is that our clients, it's okay for them to keep up with the Joneses and they should keep spending. Is that what you're saying? It's a good thing for our economy that they do that?
It's good for the economy, but you need to make sure that your income is still above your spending, or else that upward trend will tilt downwards. So if you do it correctly, keep spending. Here's what Taylor actually told me, because I'm a saver, not a spender. What Taylor told me, once you put your money for saving, everything else is guilt-free spending. So I would follow that rule, unless you would want to change it for clients, and you're giving me a different advice, Taylor.
No, this is great, Rabih.
Okay.
So essentially, like this increased tax return is kind of like it's like the equivalent of a stimulus check in a way
Yes.
for everybody. Everyone's gonna have some more money to do something with.
Yes.
And
And
we
you
keep
need
guys
feeding
can
the
see it.
economy. Right.
We,
You
do
guys
we
can
need
see
to
it.
buy
Like,
meme coins? We got to get back into meme coins, maybe, right?
hopefully not. That would be like,
Mm.
growth for the sake of growth. But you guys can see it. Like airplane flights tickets are so high, and gas on the gas pump are so high, but people are still booking their vacations. They are still traveling. They are still going on their, long drives. So the demand is, or the consumers are able to stomach it. This is being reflected by financial assets and stock market as well. On the flip side, supply. And this is where, honestly, it would eliminate the risk of inflation, because as long as the economy can keep growing and it keeps expanding its capacity to produce new products, the less of a situation will occur where there's too much money chasing too few goods. And where does our capacity and supply grow? Back in 1700, 1800, it was how many acres of land were there available to be harvested and have crops grow into them. And then in the 1900s and early 20th century, it's like how many assembly lines and factories can produce stuff. It was all about productive capacity. And in this day and age, equivalent of farmland and assembly lines in factories is called compute power, or how many computations an AI model can do. And as you guys can see on the graph on the left, it's not even exponential. It's exponential on steroids. And the ability of these new models, as you guys can see, those are just the products, AI products that we use. We're familiar with ChatGPT and OpenAI and Claude and Gemini. But every new update, software update to these models, the ability for them to compute has been growing. This is not even exponential. This is usually a power law. Like it's raised to the power 2, raised to the power 3 with every new model. This is the equivalent, economically speaking, of having, a Ford assembly line in a factory where they were able to have one line that produces cars on it, to probably have now 10 lines where each one is producing cars on it. The productive capability of our economy is growing so fast, which, if this goes too quickly ahead of the demand, we may have deflation. If the demand goes much faster than this one, we'll have inflation. If demand is the last slide. If the last slide and this slide go at the same pace, we have a really good growth in terms of the economy. And on the right-hand side, you guys can see that the adoption is still below 50%. So this new regime of AI models, of capacity that's being introduced to the economy, it is at the beginning. No matter what you hear, AI story is definitely not over, and we would still see that reflecting in prices. So these two themes are probably more important for us as long-term investors than talking about the Strait of Hormuz or what oil prices are today or tomorrow or for the next month, because these are the stories that are going to determine returns in 10 years versus what would determine returns in a year or two. In a year or two. Yep.
Love
Or
it.
30 seconds on TikTok. Yeah.
Yes, 100%. So if you guys have questions about your portfolios, we've been happy to chat, and we've been chatting with a bunch of you. But if you have more questions about how your portfolio would be tilted, or how is it exposed to short-term risk versus long-term risks, our models, we're not making large adjustments because the long-term anchor of what we're looking for, long-term evidence-based higher expected returns are still there. But if you would want us to take a look from the behavioral aspect to help you ease into this volatility that we're seeing in the market, we're more than happy to chat. So just shoot your advisor a message and I'll jump on a call with you.
You said send those questions to Rabih@denisadvisors.com.
Send them to the advisor first.
Love it. Thanks,
Well, I think
Rabih.
this ties right back to what we're doing at the summit too: handling change, handling complexity, handling these questions that come up, and keeping your personal commitments to a savings rate, to an investment strategy, sitting in your seat through all of this noise is what we're here to help understand and work through.
Love it. Thank you, guys. Appreciate it, Rabih. That's a very fascinating chart that you
Optimistic.
showed.
Hopefully optimistic. Yeah.
Let's go. Go team. So with all that said, go ahead, Rabih, or I mean, Taylor.
Oh, I was just going to say, I'm just not there yet. I need to do better because it's not taking 60 minutes of my day back yet. So I need to get on board with this.
Cool. Well, thank you guys. Quarterly progress report should be coming out soon. And quarterly market reviews should be coming to your inbox soon. Your next meeting with your advisor should be coming, like Taylor said, sometime in the summer, early summer. So keep an eye out for that as well. And of course, don't hesitate to reach out at any point to any of your advisors or team if we can help with anything along the way. And I think that's probably good to call it a day. Thank you, everybody. And you guys all have a great week, and we'll hopefully see you soon. Thanks.
Thanks, everybody.